culture is extremely important. Recently, I was talking to the CEO of a bank. They were looking at the acquisition of another bank here. And in the end, they decided not to pursue it. And the reason was culture. Everything else made sense, but they felt that the culture of their bank, which they'd worked hard to develop, and the opportunity that was available would not work, and that was the sole reason on which they decided. So it is a very, very important soft factor. Again, things like due diligence, the valuations, timing the acquisition relative to a business cycle. The acquirer, the seller should know their business cycle. They should know their businesses. If you look at the example of the acquisition of, for example, ABN AMRO by RBS globally, the business cycle was wrong, the valuations that were given were wrong, and we saw the impact that wrong acquisition or that mistimed acquisition had on a bank like RBS. And yes, an advisor to a transaction is very important. One of our oldest clients and one of the largest CEO of one of the largest business groups here, he puts it very simply, badi deal kabhi direct nahi hoti. And I will not go through many of the obvious things of valuations, due diligence, but there are many soft factors that you need to take account of in an M&A transaction, which a good advisor can help you with. When in discussions between a buyer and a seller, many times egos get involved. Inevitably, egos get involved in any M&A transaction, and it's important to have an intermediary through which you can say what you want to say and be able to hear what somebody else is saying to you. Because many times deals fall apart because something is said and either misunderstood or not properly said, and it leads to issues. So there are, in any M&A transaction, a very important emotional side of the deal which needs to be thought through as well, apart from just the hard due diligence and valuation. In our experience of doing M&A in Pakistan over the last almost 20 years, it is what we've always found, and this is based, next couple of slides are based on our experience. Time is inevitably always short in an M&A transaction. Once a deal is in play, it is very important for both the buyer and the seller to conclude it in as short a time as possible. Information inevitably, after a certain stage of the transaction, information inevitably goes out into the market, and that creates all kinds of issues, reputational issues, issues with customers, issues with staff. So it is very important that the transaction is done as quickly and as efficiently, but at the same time as thoroughly as possible, so that mistakes are minimized. And again, what we found is that it's important to work fast but thoroughly, but in a structured manner. And we found that having different teams that are focused with clear TORs that are focused on different parts of the transaction allows the transaction to move ahead in the most efficient manner. The M&A activity after the recent crisis and the downturn in global markets, in the global economy, it's been picking up quite dramatically, particularly in the US and Europe. And we are seeing that happening in Pakistan as well. And in fact, the opportunity, I would suggest, is even more exaggerated in Pakistan, because the competition for assets in Pakistan has declined significantly because of the macro level issues and the security issues that the country is facing, both from domestic investors and, very importantly, from international investors also. So whereas over the last 10 years we saw any significant transaction that happened, whether successful or not, but foreign companies were present as one of the potential buyers, whether in privatization, whether in the private sector sales. That is much less the case now. So hence an opportunity for local business groups at valuations that are, I believe, in many sectors very attractive. So again, some examples. The recent, we just touched upon the acquisition of AES Power by Nishad Group, Sarur Investments acquisition of the banks, Lotte or Kipi Chemical from Korea acquiring Pakistan, PTA, So we've seen strategic acquisitions, gathering pace in Pakistan in the last, 6 to 12 months also. But at the same time, it is correct that M&A does remain fairly subdued as an activity in Pakistan. And again, many of the issues, lack of capital, limited private equity funds available, etc., are quite common. But one thing that I'll touch upon, and this was touched upon in the last session as well, is the issue of family-owned businesses, which is linked to perhaps lack of professional management and the separation of management with ownership. Buyers feel that they don't have enough sons to expand, and sellers feel that this is a family asset and must be retained, even if the performance, even if the returns really are suboptimal and do not justify retaining that. And any serious, straightforward economic analysis would suggest that you should be selling, but they would not sell. This is a serious issue and is really constraining the growth of corporate sector in Pakistan. And I would suggest maybe ICAP can look at this in a separate session perhaps, because this is also one of the reasons why Pakistani companies have not really been able to grow at a regional and global level. Some of the sectors that we are seeing M&A activity in, and I think we'll continue to see in the next 12 months, I think M&A activity will continue in banks, in cements, in pharmaceuticals. We've seen reasonable amount of activity already, primarily driven by a number of multinationals exiting out of Pakistan, providing an opportunity to local businesses to acquire those assets in the food and beverage and the retail sector generally. Telecom sector, I think, is ripe for consolidation. Textiles, the question mark there is due to the point that I just made about the issue of family-owned businesses, which is particularly the case in the textile sector, I think, where buyers probably feel they don't have enough management bandwidth, and sellers would rather let the banks worry than sort of sell out. In conclusion, I'd like to leave you with this, I think, important thought. Crisis is a terrible thing to waste. There is perhaps a once-in-a-lifetime opportunity to acquire, to sell and reposition your businesses and accelerate your growth significantly above what you can grow organically. It is in times of great uncertainty that great fortunes are made. And we can see I just spoke about the acquisition that Lotte Group made. In a matter of months, they got their timing right. Fortune favors the brave. An acquisition which cost them very small amounts is worth almost 10 times that today. The Daud Group that started acquiring shares in Engro Chemicals in '99, the value of Engro is up 11 times since then. Even in the stock market, despite all the ups and downs, anybody who invested $100 back in '98 after the nuclear blasts where the markets plummeted, that's worth $742 today, despite the devaluation, despite the current downturn in the economy. Well, thank you for listening to me patiently, and if we have time, we're happy to do Q&A. Sure. Why don't you speak a bit louder? I'll repeat it if necessary.
The question is, this is a good time to invest in Pakistan. Would fortune favor the brave? But invested, because as you said, valuations are very low, especially in the banking sector. Is this a good time?
Valuations are very low.
Is this another
to invest in
1998?
He's asking, Shahid Saab is asking if it's a good time to invest in the banking sector. Actually, I believe it is, and without going into a lot of details right now. But again, you've got to have a strategy. You've got to know why you want to invest in the bank or why you want to acquire. Which is the business segment, business niche you're going to work on, not just a generic. I think that easy time is over. Banking sector is a lot more competitive, a lot more efficient.